Good morning, all. This is Jack from Charting the Markets, and this is the pre-market webinar for the morning of Wednesday, the 4th of March. My disclaimer, I do this for educational purposes only. I'm here to share my technical analysis with you. I hope you can take some of what I'm doing and learn from it, transfer it to your own charts. I'm not here to issue trading signals. This is a video for paying subscribers at chartingthemarkets.subset.com, and this is... and it's published on YouTube after a delay of 24 hours. All right, great. Let's have a look at the ES chart. Sorry, I was getting an unexpected call, threw me off slightly. Okay, now yesterday we saw a move down. I mean, obviously, I wasn't really expecting the historical stats to actually deliver much this week, but we had bullish stats on Monday, and they actually managed to deliver, and we had bearish stats tomorrow, and they yesterday, and they managed to deliver, and we're neutral basically for the rest of the week. So what is happening here? Well, I've got some thoughts which I'm going to be talking about on the bigger picture. We did get some buy signals at the low yesterday. We got a week 60-minute buy signal fixed on EFs, which hasn't made the possible near-miss target yet. Got another one on NQ, which is reaching the possible near-miss target at the moment. We didn't get one on RTY. We've seen a nice rally. YM, we've seen a nice rally. DAX, we didn't have anything at the low yesterday. This kind of looks like a bear flag forming. And I got to say, DAX and Nikkei have been badly affected, more than I had expected, really. Although in part with Nikkei, of course, that's the prospect of potentially much higher oil prices because they import everything. ESTX, there was no divergence and kind of looks like a bear flag, but not as convincing as the one on DAX. And Nikkei, we got a week 600 buy signal fix. That's getting near to the possible near-miss target area. And again, this could be a bear flag. We shall see, but it's more interesting when we look at the bigger picture charts, which I've had a chance to think about and look at. All right, looking at the daily middle band to start off with. Well, when we actually made it back to, we made it down and punched below the daily middle band yesterday. Sorry, the daily 3SD lower band yesterday, which is a good reason to see a rally here. The bands are quite compressed. They have not yet started to widen, and I'm thinking it's taking a few days for it to sink in what the Iran operation is likely to actually mean. Now, I don't know for a fact what it's going to mean, but I do have a lean that this is a conflict that may actually last months, and it may cause havoc, particularly in the energy markets, because with the Strait of Hormuz closed, and with drones now, it is particularly and even easier to close the Strait of Hormuz than it has been in the past. It's never really been closed for a long period, but enough of the necessary oil can only go through there to cause major problems in the oil markets and cause a major supply squeeze. And this, I think, is probably going to happen. Now, it could be wrong, and it could be this will all be a storm in a teacup and the Iranians will roll over and play dead and so on. But at the moment, there's no sign of that happening, and honestly, I don't think it's that particularly likely to happen. One thing I would note here, and I've got to mark that up on the hourly chart, is that I've been talking about the possibility this was a head and shoulders for a while now. That head and shoulders broke down yesterday. It broke down with the target in the 65.40 area. Now, that could fail. If so, we'd see a move back over the right shoulder high at 69.52. That would fail it and set up a retest the high. But really, I'm expecting to see either that fail or to head down towards that target. And I think there's a pretty decent chance that we are basically consolidating before the move down to go down to that target. No divergence on the hourly chart, no divergence on the 15-minute chart. Looking at Qs, basically almost made it down to the 3SD lower band yesterday. The low was at 591.87, and that closed at the 3SD lower band closed at 590.85. Again, good area to see a rally from. Not really seeing an obvious topping pattern here, although this large double top here is a potential contender. But we didn't quite make it to the retest of the high on on NDX, although we did make it there on the Qs, and so that weakens it slightly, but we will see how that goes. I am thinking there is a possible alternative here where we'd be forming a bull flag on NDX, and that could take us down into maybe 577, 575 area. We will see how that goes. But I think there is definitely scope to go lower, but there's not an immediate short-term bottoming pattern with a target that we can look at. Nothing really happening on the hourly chart. This buy signal reached possible near miss target and is out now. And we've got a little RSI 5 sell signal that's fixed on the 15-minute chart, but it's not really anything to write home about. Okay, looking at Dia. Dia was interesting because we again punched below the 3SD lower band as we did on IWMs. These were all good reasons to see rallies from the low yesterday. But we had no real prospect for getting back to the daily middle band. I mean, it's a possible target, but at the moment we've only just managed to get back to the daily lower band. We will see how that develops. But here this was interesting because this went down to a possible head and shoulder neckline. And it's a nice one, actually. And I'm thinking that we may well be forming a right shoulder here. We're actually in the ideal right shoulder high area already, although it might go higher. But this actually would give us a big head and shoulder pattern potentially. Then on a breakdown, could look for the 38.2% retracement of the move up from the late April low, which would be in about the 450 area. That has a shot and is a decent looking pattern. We've got a decent large looking pattern on the Qs as well, even if I don't like the fact that the second high didn't get to where I wanted it to get to, but we've got topping patterns here. I'm going to do a post about it, probably be out tomorrow morning, but decent looking topping patterns. Let's have a look at the others. Okay, and let's have a look at IWM. Okay, IWM hasn't got a decent looking topping pattern here. We could potentially form a head and shoulders, but the obvious neckline would be down in the 245 area, which is a long way down. We're also got a potential. This was a potential overthrow of this rising wedge from the April low last year, and we got very close to testing the support on that yesterday. Again, the bands haven't widened yet. Again, we punched below the daily 3SD lower band yesterday. So again, I think we'd be needing 2 or 3 days consolidation really before that could move down. But we could, in that case, be forming a bull flag here. This would be A, B, C, maybe get us down into the 250 area or slightly lower. But that could get us down to, obviously, the possible head and shoulder neckline in the 245 area, and we could form a right shoulder there and have a larger pattern to go down. We shall see. On the hourly chart, nothing happening. On the 15-minute chart, nothing happening either. But we will see how that goes. Now, DAX was actually very seriously affected in a way which I really wasn't expecting. And actually, I'm just gonna add the 3SD orange bands on here just to give us a point of reference, because I don't normally keep it on this chart because actually normally it isn't really needed. But this is the 3SD lower band here, and you can see we punched a long way below it and actually didn't close much above it. Actually, we closed below it. Did we? 23? Yeah, we did. Wow. This was an extreme move on DAX. Now, again, we've got very compressed bands here. Those are starting to widen out a little, but again, a very obvious area to make a low here and consolidate for a while. We shall see. All right, Nikkei. Nikkei also had a bigger reaction than I was expecting. This isn't flirting with the 3SD lower band. It's only just made it a slight break of the daily middle band here, but nonetheless, we had a possible RSI 5 sell signal brewing, and that fixed and made target on the same day. We still got an RSI 14 sell signal fixed, but this was weaker than I was expecting it to be, and this may be because, and we reached a possible head and shoulder neckline as well, of course. So an obvious area for a bounce into form a right shoulder. But I'm wondering whether this is because they're unusually, well, they basically import all their own energy. So I'm wondering whether that's the reason that they've been badly affected here. We shall see. All right, great. Let's have a look at the DX chart. Now, DX has been rallying so far with this, and at the moment, I've got to say, this is starting to look as though we're going to see dollar rally and bonds go down in this crisis, which is actually more or less the opposite of what I'd normally expect. Nonetheless, you've got a decent looking setup here, and actually we've got a potential setup that on a strong move. Dollar could get back to about 105. I was talking about that on the bigger picture webinar this morning and watching that with great interest. Looking at the other currencies, seeing a bit of a rally here on Euro, GBP, a bit of a pullback on USD/JPY, some signals, nothing really particularly strong to be looking at. In terms of ZB, we saw what I was initially expecting to see on the Iran invasion, which was, well, invasion, special military operation, whatever. No one seems to want to call it a war for whatever reason. I think because Congress, of course, would technically need to be involved in a war. But we saw a move up in a flight to safety, and we're seeing a pullback here, and we are seeing indication on both precious metals and on bonds that pullback might extend considerably further from here. We've got sell signals fixed on TNX. Buy signals fixed on TNX and TYX daily charts, and that is suggesting that bond's going to go down. So watching that with great interest. Possible head and shoulders forming here, possible head and shoulders forming on ZN as well. Looking at CL, we haven't reached the point where we would be breaking up from the big inverted head and shoulders on light crude, and we have. I think the resistance for that is at 78.40, but if we are going to see the Strait of Hormuz closed for an extended period, that is going to break up. So seeing a bit of a pullback here. I think we're still in the trying to work out what the hell's happening stage. And that may well last the rest of the week. But while that is happening, we're not seeing we're seeing lots of confident talk from Trump, but we're not seeing really any signs of weakness or a willingness to negotiate from the Iranians. And I think really the Iranians have been expecting this quite a while, and it takes big authoritarian regimes can be hard to topple, and there's not much history of doing that from the air. Normally it involves some boots on the ground. The Gaddafi regime fell, but you didn't, and we're still really they've been in an on and off civil war ever since then. No successor government has actually managed to get established. So the history is weak. We'll see how that goes, but at the moment, CL not far away from the highs, HO not far away from the highs. Possible little level tops forming here. NG. Possible IHS forming here, or retest the low and set up a double bottom. If we're going to see the Strait of Hormuz closed for an extended period, this may well, I would expect that probably to cause some upside on NG. Looking at GC, we formed a larger rising wedge, and then we broke down from that larger rising wedge, and I'm thinking we may well see more downside here. SI still looks like a bear flag, Palladium still looks like a bear flag, Platinum still looks like a bear flag. And HG, I've changed the form of the triangle. This is now looking like an ascending triangle with a flat top and rising lower trend line here. But at the moment, that is a very, very nice ascending triangle. And I'd still be regarding this, in effect, as a bear flag setting up a retest of this low. All right, looking at the commodities, KC. KC, we've got a nice looking double bottom. 60-minute buy signals reached a possible near miss target. Sugar has broken up from an IHS. I have some doubts about whether that's going to make the target, but watching it with interest, it would invalidate on a move down below the right shoulder low, which I've got in about the 13.77 area, I think. CC looks like we might see a little bit of a rally, but at the moment this has been a very, very small rally indeed. Could be setting up for a larger rally, but at the moment the 60-minute buy signal that's fixed is getting pretty close to the possible near miss target with it having barely moved. On CT, CT broke down from head and shoulders with a target in the 63.65 area. Seen a bit of a rally from the lows yesterday, but I'm still thinking that might well make a target. Lumber looks as though it's resuming the downtrend, but it hasn't made any convincing break to the downside yet. On wheat, possible topping action here, wondering about a possible head and shoulders forming. The 60-minute sell signal has reached target. Corn still looks like a bear flag forming. Soy still hanging around pretty close to the highs. ZL still has broken up from this pretty decent looking rising wedge. Might be forming a larger pattern, watching that with interest, but at the moment this looks like a little bull flag forming. Live cattle, not sure what's happening here. Nice little retracement, but I'm still not seeing an obvious topping pattern here. HE wondering about an A, B, C, where they move down maybe into about the 88.75 to 90 area. We will see. All right, great. In that case, I think that's a wrap. Everyone take care, and I'll catch you guys tomorrow. Look out for a post. I'll be aiming to get a post out in the morning looking at the possible topping patterns forming here. All right, cheers. Bye.